Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is proud to be ranked 8th in the 2023 Influential Tigers by Tiger Brokers. With over 768,000 reads and 53,000 likes, plus 650 videos and more than 300,000 watch hours as of December 2024, this community has grown into something truly special. Thank you for being a part of it. Today, we're diving into one of Singapore's banking giants, United Overseas Bank Limited, or UOB for short. It's been making waves in the market recently, and with its stock currently priced at SGD 37.18, many of you are asking, should I buy UOB stock now? Let's break it all down. Before we get started, don't forget to like this video and subscribe if you haven't already. It helps the channel grow and keeps me motivated to bring you more insights every week. All right, let's get into it. UOB is one of Singapore's big three banks, alongside DBS and OCBC. Founded in 1935, UOB has grown into a financial powerhouse with operations in 19 countries. Its services range from retail banking to wealth management and treasury operations. But what really sets UOB apart is its strong focus on Southeast Asia. Markets like Thailand, Malaysia, Indonesia, and Vietnam are key growth areas for the bank. Currently trading at SGD 37.18 per share, UOB has seen a solid performance over the past year, with its stock climbing over 31%. That's no small feat in today's volatile market environment. Analysts have set a price target range of SGD 36.40 to SGD 43.60 for UOB in the near term, with a consensus target price of around SGD 37.91. This suggests that while the stock might not be dirt cheap right now, it still has room to grow. Let's talk about dividends, because I know many of you love dividend-paying stocks. UOB offers a forward dividend yield of about 5.56%. To put that into perspective, it's higher than what you'd get from putting your money into most fixed deposits or CPF accounts. If you're an income-focused investor looking for steady cash flow, this is definitely something to consider. But what's driving UOB's performance? Let's look at some recent developments. First up is their financial performance. For the first 9 months of 2024, UOB reported a core net profit of SGD 4.7 billion, a 3% increase compared to the same period last year. This growth was driven by higher fee income from areas like wealth management and lower credit allowances as economic conditions improved across Southeast Asia. Another big win for UOB has been its acquisition of Citigroup's consumer banking business in several ASEAN markets like Malaysia and Thailand. This move has significantly boosted UOB's customer base and strengthened its position in wealth management, a high-margin business that banks love. On top of that, UOB has been making strides in sustainability. They've committed over SGD 44 billion to green financing projects across ASEAN. Whether it's funding solar farms or helping businesses decarbonize their supply chains, UOB is positioning itself as a leader in sustainable finance, a trend that's only going to grow in importance. But it's not all smooth sailing for UOB. Rising credit costs in markets like Thailand could weigh on profitability in the short term. And while their regional expansion strategy is promising, it also exposes them to geopolitical risks and currency fluctuations. Now let's shift gears and look at how UOB is performing in the market. In terms of trading volume, over 529,000 shares were traded just yesterday alone, showing strong investor interest in this stock despite broader market uncertainties. Technically speaking, the stock recently dipped below its 15-day moving average, but remains above key support levels around SGD 36.40. If you're a technical analysis enthusiast like me, here's what you need to know. UOB faces resistance at around SGD 37.50 to SGD 38, a level it will need to break through before we see another leg up. On the downside, key support lies at SGD 36.40. Momentum indicators, like the Relative Strength Index, RSI, suggest neutral momentum right now, so we might see some consolidation before any major price movements. So where does UOB stand compared to its peers? Let's take DBS and OCBC as benchmarks since they're all part of Singapore's big three banks. DBS is often seen as the leader when it comes to digital transformation. They've invested heavily in AI-driven banking solutions and have a strong digital presence across Asia. OCBC, on the other hand, excels in wealth management with its subsidiary Bank of Singapore catering to high net worth individuals. UOB sits somewhere in between these two giants, but differentiates itself with its focus on mass affluent customers and cross-border trade financing within ASEAN, a region that's expected to see robust economic growth over the next decade. The broader banking sector in Southeast Asia is also worth discussing here because it provides context for UOB's growth prospects. As economies recover from the pandemic and trade flows within ASEAN increase thanks to initiatives like RCP, Regional Comprehensive Economic Partnership, banks are well positioned to benefit from rising demand for loans and financial services. However, challenges remain. Net interest margins are under pressure due to intense competition among banks, while geopolitical tensions could disrupt trade flows within the region. So should you buy UOB stock now? Here are my thoughts. If you're a long-term investor looking for stable dividends and exposure to Southeast Asia's growth story, UOB is a solid pick at its current price level. The bank's strong fundamentals and strategic initiatives make it well positioned for future growth despite short-term headwinds like rising credit costs. For short-term traders or those looking for quick gains, I'd recommend keeping an eye on those resistance levels we talked about earlier, SGD 37.50 to SGD 38, and waiting for a breakout before entering. And that brings us to the end of today's deep dive into United Overseas Bank Limited. If you found this video helpful, please give it a thumbs up and share it with your friends who might be interested in investing in Singapore stocks. Don't forget to check out my other videos where I cover topics like how DBS compares against OCBC or my beginner-friendly guide on dividend investing in Singapore. It'll be linked right here on the screen. Thanks for watching The Investing Iguana, your go-to channel for all things finance and investing. Until next time, stay curious and keep investing smartly.